my second favorite topic after avocados and Reddit feed. It is that of Treasuries. Caroline and Liz, all joking aside, big day in the markets here with bonds really catching a bid. I mean, down 8 basis points or so. How are you thinking about the Treasury markets at this moment?
Yeah, well, and when you figure out the Reddit thing, you can share it with me. So, but yeah, the Treasury market took a breather today. We had an auction which went well, and we have 2 more coming this week. But I would say no one's saying, you know, things are all clear and that this kind of yield rise that's been underfoot this year is over. But we have had a good day. We had Chairman Powell, as you know, speak with Janet Yellen, our Treasury Secretary, and they kind of stayed the course on things they've been saying. So, you know, it was a day of reprieve for the, you know, kind of crazy ride we've had with bonds.
Crazy ride indeed. And talk to us about whether we are going to see continuing pain in this trade or not, or how people are setting themselves up for the all-important rebalancing as well that I have to fear that we're going to be talking about to death until the end of the month.
Right, right. And, you know, most people, I think there's few, you know, like they say, want to stand in front of a moving train that say, you know, usually you see buyers come in when yields go, you know, fairly high, cheaper prices. But right now there's just so much volatility and they keep moving. So few people are ready to say, hey, this is over. You know, we have some big names. We had Ray Dalio and Bill Gross talking about, you know, they're very bearish on bonds. And, you know, a lot of the Wall Street strategists have been kind of cranking up higher their year-end forecast. So I think for now, a lot of people are thinking, you know, that yields can go higher. It's not clear. You know, the Fed is really, as you know, part of their policy is to allow inflation to run hot. You know, we aren't getting really high inflation prints yet, but that's what's helping kind of move yields higher in the long end. And the rebalancing, it seems like that there may be some flow into bonds because they've done so badly. You know, so it's like you and I rebalancing, and stocks have still done fairly well. But we'll see, like you said, watching carefully as we get to month and quarter end.
Liz, you talk about the inflation dynamics on the long end. What about the technicals? We have a killer chart showing bond prices and the total return that follow that are off to some of the worst starts that we've seen in a decade because supply and high yield supply is also the highest that it's been going back in a decade. Is this a supply issue, not a demand issue?
Well, I think the supply is the huge gorilla in the room, right? Because we've had a lot of supply for a while, and, you know, surprisingly, like last year, you know, even before the pandemic, there was a certain, you know, pickup in supply. It didn't really do anything. Then we had the pandemic. It changed everything. But you're right. Now we have just a lot of Treasury supply. We have a lot of corporate supply, which, you know, as yields are going up, it's like you and I kind of scrambling at the last minute to say, oh, I better lock in and, you know, refinance my mortgage because yields are going up and I may miss a chance. You know, these corporations are saying, you know, better sell more debt because the yields may go higher. So, yeah, there's been just a big supply hit that's adding to, you know, the inflation fear, like you said. So I do think that's playing a big role. And you're right, you know, that really cool chart some of my colleagues did and showing just the worst start since, you know, 1999. So it's been a rough beginning of this year for sure.